Hello, good afternoon. You're tuned into Your Stocks coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in. As always, festive greetings to all our viewers as well. But when you look at the market, we're seeing a bit of a decline coming in from the day's highest point for the Nifty, Bank Nifty, which was at all-time high and record high levels. We are seeing a fall coming in from there as well. Now, Bank Nifty is managing to just hold on to gains of almost 0.1%. So keep an eye out on that one. Nifty, 25,670, approximately around that level is what the Nifty is trading at. Nifty mid-cap, further more decline is what we've seen coming in for the Nifty mid-cap. It's down 0.7%. So keep an eye out on this. Markets have significantly come off the day's highest point. In terms of the top losers that we're seeing coming in, especially on the broader end of the market, Sterling, Wilson, Credit Access Grameen, Wipro, Mastek, all these are reacting to their numbers as well. So keep an eye out on that. Nifty IT clearly seems to be a bit under pressure today, given the numbers post, Infosys, Wipro, LTI, all of these reporting their numbers yesterday. But that's the market setup that we're watching out for. But this is a show where we solve all your stock-related queries. And to do just that, we have Shahina Mukadam, independent market expert, joining in with us to do just that. Shahina, good afternoon. Thank you so much for joining us. And firstly, festive greetings to you as well. Happy Diwali in advance and hope you have a great one as well.
Same to you, Vinny. Same to you, your viewers. Happy Diwali in advance. And let's hope the year coming forward is going to be much better than the year that's going by.
Absolutely. Hope that really turns out to be the case in terms of the returns that you're watching out for. But let's get started with those queries then, Shahina. The first query for today is coming from Venkat, who's writing to us from Chennai. He's holding 20 shares of Force Motors. The price at which he's purchased is 1,486 rupees. He wants to know and he's asking if he should buy at current levels in terms of more of Force Motors. Your view on this, Shahina?
He's made a good amount of money. And I think even from here, he can actually add, the price levels that he's talking about, 15, 16,000, I would say are very good levels to add at. Even at current levels, it's fine. If you see last 2 years, the company has actually turned from losses to profits. And that has actually seen this huge rally that we've seen. Now, at current levels, I wouldn't say it is cheap. If you look at turnover, it's about 1 year forward, it's about 2 times. The market cap is 2 times the turnover. If you look at EBITDA, market cap is EV by EBITDA is about 20 times. So it is not cheap. But if you look at the plans that they have going forward, it is very aggressive. They are going to invest about 2,000 crores to set up or to expand the EV portfolio. And as you know, now China has agreed. If it is for domestic use, they are going to supply us with the rare earth components. That and Force Motors, 90% of their revenues is domestic. So it is a good long-term story. You can keep adding and hold it for the medium to longer term.
Okay, hold it for the medium to long term is the view coming in from Shahina on Force Motors. Let's move on and talk about the next query for today. We have Sai Gopinath, who's writing to us from Hyderabad. He's holding 270 shares of Vari Renewable, and this is at a price of 2,039 rupees per share. They're making a loss on this one, while the other one is 900 shares of Transformers and Rectifiers at a price of 490 rupees per share. So he wants to know whether to hold or sell at current levels. What should he be doing with both these stocks, Shahina?
I think there is some mistake in the price that he's actually given, or maybe it is post split. There was a split of 10 rupee share to 2 rupee share, because I don't see this price, post split. So I would still think that he is making money if he's acquired it at those levels, 2,000 type of levels. See, as of now, I would say you can continue to hold.
Okay.
Basically, the parent is pretty strong, and as you saw the numbers that they came out with, very strong numbers. They're talking of something like close to 50,000 crores of order book, which is to be executed over 2 years. And Vari Renewable will benefit from it because they do work along with their parent company in many ways, suppliers, etc. Also, in terms of the numbers, they are coming up with very strong numbers. If you saw the Q1 numbers, their turnover was up. In fact, even Q2 numbers out, they are up by about 48%, and PAT is more than doubled. So if you go on at this growth rate, then I think if you hold it for about a 3-year period, valuations will become more attractive. Currently, I would say it is slightly expensive. But because it is about 4 times FY26 revenues, if you look at shorter term and 20 times EBITDA. So short term, yes, it is slightly on the higher side, and the stock has been consolidating over the last 1 year. But if you hold it for the longer term, I think it should give you a decent return. It's in a good sector. So I would say continue to hold. Transformers and rectifiers also similar story. Valuations are very similar to what it is for Wari Renewables. So there also, I believe the growth, it's a small cap. The growth is pretty strong. And I would believe their order book is also very strong. They are talking of something like 8,000 crores of order book by the end of this fiscal or beginning of next fiscal. So that again gives you, market cap to turnover about 2 times. So I would say continue holding both of them.
Continue holding both of them. Thanks so much for that, Shahina. And the next query now we have is coming from Siva Kumar, who's writing to us from Coimbatore. He's holding 1,200 shares of Chennai Petro, and this is at a price of 870 rupees per share. Wants to know whether to book his losses, stay invested, or maybe look to average also this one. Shahina, your view?
I would say it is better to book losses and exit. The numbers have been pretty disappointing. First quarter also, they came up with a loss. Actually, the loss was more on account of the lower GRMs. I mean, we were expecting a GRM of around $5, but they came out with GRMs of less than $4. Now, the problem here is that oil prices are very, crude oil prices have been fluctuating. And while as of now the prices are low, because of the geopolitical risk, we really don't know where it will be like a couple of months down the line. So I would say, and valuations also compared to the other refiners, it is on the higher side. So instead of being in a pure refiner, I would say it is better to be, in something like a Reliance also, if you want to be in that sector, which gives you an opportunity to be in multiple segments. So I would say it's a switch.
Okay, a switch coming in for Chennai Petro as a view over there. Let's move on to the next query then. This is coming from Siva, who's writing to us from Hyderabad. He's holding 150 shares of Bajaj Housing Finance, and this is at a price of around 130 rupees per share. Right now, he's making a loss on this one. Now, he's a long-term investor. So what should he do with this? Should he continue to hold Bajaj Housing Finance or maybe shift to another one? Shahina?
Yeah, so the stock has really not done anything over the last 1 year. And that is because of the valuations. Of course, the group is a very strong group, but valuations were so expensive. If you looked at it, post IPO, and it was one of the very well subscribed IPO. But after that, the stock for an investor has disappointed if you've gotten post the listing of the IPO. Now, if I look at it today, see valuations, if you look at it 1 year forward, is about 4 times price to book. So that puts you on the slightly more expensive, in fact, more expensive than the other housing finance companies. Having said that, I think in terms of growth, they are growing much faster than the rest. While the industry is growing about 11-12%, they are growing 25% plus. And the funds that they raised from the IPO, which is 6,500 crores, plus the recent NCD that they have raised of about 1,000 crores, I believe this will enable them to sustain this growth. Also on the, in terms of their PC, the provision coverage is quite strong. It's about 57%. Net NPAs is very low. So I think it's a very strong management, well held, good growing company. AUM is more than 1 lakh crores. So I would say you can continue to hold. AUM is also growing by about 25% plus. So I would say continue to hold, but keep a very strict stop loss because it is consolidating at current levels. So I would say keep a strict stop loss, say 100 rupees or 105. And, if it falls below that, then maybe it is time to relook at it whether you need to exit. But otherwise, you hold it for the long term.
Okay, otherwise hold it for the long term. That's the view coming in there for Bajaj Housing Finance. But Shahina, thank you so much for joining in with us this afternoon. Hope you have a great festive season. Happy Diwali to you, your family, as well as the team. Thank you so much for joining us. And viewers, thank you so much for tuning in as well. With that, we're going to wind down this edition of Your Stocks with the Nifty off the day's highest point right now. But don't go anywhere. You have closing bell up next to take you through all the market action.